The Anatomy of a Guaranteed Loan, sponsored by BHM Cash. People with bad credit, or those people with high risk or poor credit history, often have a hard time getting approved for new credit. The problem is that in case of emergency or any urgent need, they won't have any options when it comes to borrowing money. Good thing there are guaranteed loans that are made available to them. While borrowers with sound credit ratings can at any time get a signature loan from any bank, and they don't need anything in particular to get approved, just their signature to the back of their loan. They usually get better loan terms with lower interest rates, but for a guaranteed loan to work for high-risk borrowers, lenders will need more than their signature for the loan to get approved. For high-risk borrowers to be approved for a guaranteed loan, they need to prove that they are able to hold a job for at least a minimum period of 3 months. Paychecks and stubs or certificate of employment will help in proving this. A borrower will also need to have a bank account that is in good standing. Borrowers in the process of discharging bankruptcies are not allowed. This is because there may be a risk that the court will intervene by attaching the new loan to the proceedings, which may probably come at the expense of the lender. As with any other legal contract, those that seek to apply for a guaranteed loan need to be at least 18 years old, which makes them legally bound by their decisions. This type of loan usually works for people with poor credit because credit scores are not part of the requirements of this type of loan. In a majority of cases, an unsecured personal loan is short-term, which usually becomes due when the borrower receives his new paycheck. The amount of the loan depends on how much the borrower wants to apply for, which is still subject to their demonstrable monthly income and the balance in their bank account. The lender deposits the money straight to the borrower's bank account upon the approval of the unsecured loan. As part of the process of this type of loan, the lender gains direct access to the borrower's bank account. The lender reserves the right to debit the borrower's bank account directly rather than waiting for the borrower to make payments to the loan. This is to ensure that the payments are made once they're due because of the high risk associated with the borrower. This sort of guarantee is what makes lenders overlook the poor credit scores of their borrowers. The bank will have the responsibility of collection just in case the borrower's account is overdrafted because of the loan payments. Some criticize unsecured payday or guaranteed loans, claiming that they take advantage of those that are in dire need of cash, offering high interest rates to those that are least able to pay. That being said, offering this type of loan comes with higher risks, too, for creditors and lenders, which is why they also need to recover from their losses.